Good morning, traders, and welcome to BCR's morning market outlook. Let's run through the latest moves across currencies, commodities, and metals as the markets position ahead of Friday's key US jobs data. First up, let's talk a bit about the US dollar, which held steady around 98.25 on Thursday after showing some weakness in the prior session. Traders are cautious ahead of Friday's August non-farm payrolls, where expectations sit at 75,000 new jobs and unemployment ticking up to 4.3%. A weaker print could add further pressure to the greenback and strengthen bets on a Federal Reserve rate cut later this month. This comes after softer US data midweek. Job openings fell to the lowest level since September 2024, while factory orders dropped for the second month in a row. Markets now see a 99% probability of a 25 basis point cut in September. Technically, the dollar is finding support near 98, but remains in a broader downward consolidation channel. Resistance sits at 98.7, while a clear break below 98 would put the Monday low of 97.54 back into focus. The short-term outlook remains tilted to the downside, with Friday's key payrolls data likely to drive the next decisive move. Next up, let's have a look at WTI crude oil, which slipped further to 62.95 per barrel on Thursday, extending the previous session's sharp drop. The weakness comes as reports suggest OPEC may consider raising output at its weekend policy meeting, potentially scaling back the group's current 1.65 million barrel per day production cuts. Added to that, the US inventories unexpectedly rose by 600,000 barrels last week, defying expectations for a sizable drawdown and reinforcing concerns about oversupply. Technically, crude had run into stiff resistance near 65.76 and $66 before turning lower. The bearish bias remains intact, with short-term moving averages crossing lower and consecutive down candles showing a downside momentum. A break below 62.8 could open the way towards $62 and 61.45, while bulls would need to reclaim the 64.30 mark to shift momentum back towards the mid $65 level. Turning to gold, gold's rally remains a standout theme, with the metal marking 7 straight sessions of gains and pushing to a new record high this week. Wednesday saw an intraday peak near 35.78 an ounce, while Thursday's session saw consolidation around 35.30. The move is fueled by weak labor data and dovish Fed commentary, which affirmed expectations of a September rate cut, while global trade tensions and inflation risks continue to underpin safe haven demand. On the charts, gold has found support near $34.58, with $3,500 now serving as an important psychological level. Holding above it keeps the door open for another run at $35.60, and Wednesday's highs around $35.78 and $35.79. A sustained break there could pave the way down to $3,600 and beyond. On the downside, a clean break below $3,500 would bring back $34.58 into focus as key support level. Lastly, let's have a look at the Australian dollar, which is holding just above 65.20 after a modest pullback supported by strong trade and growth data. July's trade surplus widened to 7.31 billion Australian dollars, the biggest in 17 months. Thanks to robust export growth and softer imports, combined with the upbeat Q2 GDP, the figure reinforces expectations that the RBA will keep rates steady at its September meeting, with markets pricing showing nearly a 90% chance of no change. From a technical angle, the Australian dollar remains within an ascending channel, keeping the bias constructive. The pair trades above its 20-day moving average at 65.04, with resistance ahead of 65.68 and 65.90. A break above the channel top would open the way toward July's 9-month high at 66.25. On the downside, support is layered at 65.04 and then 64.58, and the psychological level of 64 cents. Well, the dollar is steady but vulnerable ahead of jobs data. Crude oil is under pressure from supply concerns. Gold remains firmly in record territory, and the Australian dollar is supported by strong domestic fundamentals. With payrolls and OPEC both on the deck, the next 48 hours could bring sharp moves across asset classes. That's all for your morning market outlook. Wishing you a productive and well informed trading day ahead. As always, manage your risk and happy trading.